Alright, Franklin Templeton just confirmed XRP for Wall Street. So, the question is Wall Street quietly orchestrating the biggest XRP takeover in history? So, picture this. While the average retail trader is staring at charts, panicking over small price moves, a $1 trillion asset management giant is sitting in closed doors meetings with global regulators, drafting a literal playbook to integrate XRP into the traditional financial system. This isn't a fury, and this isn't old news. A video clip has been circulating heavily on X, shared by crypto commentator Digital Asset Investor right here, showing a top Wall Street executive confirming that XRP has already cleared the hurdles that are currently crushing almost every other digital asset in the market. We are talking about Franklin Templeton, a financial institution that manages over $1.5 trillion in assets. They aren't just dipping their toes into crypto. They have built a regulatory blueprint specifically around Ripple and the XRP ledger. So in this video, we are breaking down the exact words from their leader, why their Spot ETF on the NYSE Arca changes the game, and why the old financial system is choosing maturity over the Wild West mentality of other blockchains. So let's get right into the data. So why did Franklin Templeton build a secret playbook around Ripple? The executive on the viral clip is Roger Bayston. He is Franklin Templeton's head of digital research, digital assets, right? He openly explains that their early conversations with global regulators directly shape how they view and use XRP. He admits that the firm developed a strict selection criterion. This framework effectively became the gold standard once Franklin Templeton became one of the very first mega institutions to break through the regulatory door. Now, here's my opinion. Wall Street didn't just stumble onto XRP because of social media hype. They spent years working with regulators to build a customized, compliant doorway. So to me, this proves that the institutional money was never going to buy XRP on a random retail exchange. They waited until they could build a regulated structure around it. So as a market observer, this tells me the foundation under XRP is completely different from any other altcoin. It is built to support trillions, not millions. Now, is XRP being treated as a network data operating system rather than a speculative asset? Roger Bayston makes an incredibly sharp distinction in the video that most retail investors completely miss. He emphasized that Franklin Templeton was never trying to act as a decentralized, permissionless asset issuer. Instead, they operate strictly as a heavily structured securities business. They are using XRP's rails as an underlying data and operating system to move value. They literally work through massive regulatory hurdles just to put this specific template in place. Now, here's my opinion. This completely changes the narrative. For years, people have debated whether XRP is a currency or a security. But Wall Street doesn't care about that debate. They view the XRP ledger as a piece of high-speed financial infrastructure. It's like a superhighway for data and money. So in my view, when a $1 trillion firm treats a blockchain as their core operating system, the token powering that network becomes an essential utility. They aren't holding it to hope the price goes up. They are using it because the old system is too slow and too expensive. Now, why does Wall Street care more about Ripple's leadership than the blockchain code. The technology behind a blockchain is important, but Roger Bayston explicitly states that he puts far more weight on the people running it. He points out that in his direct meetings with Ripple and the XRP team, he sees individuals with decades of traditional financial experience matching his own background. He contrasts this mature leadership directly with the classic move fast and break things mentality that dominates the rest of the crypto space. For him, wisdom in applying this technology carries much more weight than the code itself as XRP scales up. Now here's my opinion. This is a massive wake-up call for the entire crypto community. Silicon Valley loves founders who wear t-shirts and break things, but Wall Street hates them. Wall Street wants to talk to people who understand compliance, risk management, and international banking laws. Ripple's executives speak the language of central banks. So my perspective is that this professional alignment is the real reason XRP is winning the institutional race. You can copy open source code, but you cannot copy 30 years of institutional trust and executive wisdom. So what does the reality of the Franklin XRP Trust or the XRPZ prove to the market? Franklin Templeton hasn't just talked about their interest. They have backed it up with massive, undeniable action. The firm successfully launched the Franklin XRP Trust, which is actively trading as a spot ETF under the ticker symbol XRPZ. XRPZ on the NYSE Arca. On top of that, they are actively collaborating with Ripple and DBS Bank on massive tokenization initiatives directly tied to the XRP ledger. And now here's my opinion. Let's stop talking about adoption as a future event. It is happening right now. This 2026. A spot ETF trading on the New York Stock Exchange means that any institutional fund, retirement account, or high net worth individual can gain direct exposure to XRP with a single click. When you combine this with tokenization projects alongside major institutions like DBS Bank, it becomes clear that the XRP ledger is being positioned as the primary ledger for tokenized real-world assets. The market is shifting from speculative retail trading to massive institutional volume. Now, here's our overall conclusion. When we look at the entire picture, the conclusion is completely straightforward. One of the largest asset managers on earth is openly signaling that XRP has completely outgrown its early speculative stage. It is fully prepared for the massive, large-scale institutional role that Wall Street has been quietly constructing behind the scenes. So my final assessment of this entire development is that retail investors are looking at the wrong metrics. While people complain about temporary price suppression, institutions are building massive regulatory bridges. The fact that a spot ETF like XRPZ is live on NYSE Arca paired with Roger Bayston's confirmation of their regulatory template tells me that XRP's destination is already set. It has been chosen as a core layer for the future of digital finance. So ground your strategy in this massive structural reality. Look at what the biggest money on earth is doing and ignore the noise. And this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.